So we are moving 500,000 euro of our retirement investments out of the United States and into Portugal. And here's the part that may surprise you. Yes, this investment can qualify us for Portugal's golden visa. But if Portugal eliminated that golden visa tomorrow, we would still make this investment. Why? Because Portugal's market returned 37% compared to the United States' 17% in 2025. And so far in 2026, well, Portugal's up 14%. United States up about 10%. So you see a pattern here? Plus, the fund that we are investing in was up 25.1% in 2025. And it has an annualized return of 13.6% since its inception in 21. And it gives us something that our heavily Americanized portfolio increasingly needs. Another country, another currency, another economy.
Not another husband, though.
And stick around to the end. We'll math this strategy of how one investment can fund your entire European retirement. Hello, Rainbow people. I'm David.
And I'm John. And Optimize Investment Partner sponsors Crew Money, as you all know, and we're personally investors in the Portugal Golden Opportunities Fund strategy. So yes, this episode is sponsored, but we're talking about our real money here, which is why today we're sharing 3 reasons why we would continue to invest in this fund and 1 reason why we would not. And to be clear, this is not all about selling America. It's just stop making America your only financial plan.
Right? All right, so let's take a look at the 3 reasons why we're saying yes to this fund. The first reason is that the investment has to work without the visa. So here's the test that we applied. We said, let's take away that it's Portugal, which we love. Let's take away residency, which would be fabulous. Let's take away the Schengen travel, which would also be fabulous. And let's take away the possibility of a future citizenship in an EU country. Would we still put our money into this underlying investment? And for us, the answer increasingly became yes. You see, Optimize currently reports the returns that we mentioned at the outset here, separate of their management fees and fund level expenses. So you're getting that true return. And we know that past performance doesn't guarantee future returns. But if we put this another way, when it comes to your true numbers, if you had put 10 euro into this fund at the end of 2021, at the end of June 2026, that 10 euro would be now worth 17.74 euros. That's a 77% increase. Now, again, the next 4 years, not going to be like the last 4 years. And let's hopefully make sure that that's the case. But it does tell us something important. This isn't an investment where we're saying, okay, well, the returns suck, but at least we get a visa. No. A fabulous residency with crappy returns is still crappy investing, and we don't want to do that. So if you like content like this, remember to give us a green heart emoji in the comments, and then like and share this content because it really does help the channel.
All right, the second reason why we're still investing in this fund is because we actually understand what we own. The structure is very similar to investments we've been holding all of our lives. A lot of Golden Visa investments are private funds with holdings that are difficult to price, difficult to understand, difficult to research, and difficult to sell. This one invests primarily in publicly traded Portuguese stocks and bonds. As of the end of June, roughly 75% was invested in stocks, 25% in bonds, and nearly 89% of the portfolio was invested in Portugal. Companies in the portfolio have included brands such as BCP, Galp, CTT, and other publicly traded Portuguese businesses. And this matters here. The fund is open-ended and is priced daily, so it's easy to monitor. It permits daily contributions and redemptions, with redemption settlements generally within 5 business days, so you can access your money relatively easily. There are currently no redemption or performance fees. Optimize lists a 1.8% management fee, and it publishes its performance numbers already net of those management fees, as David said earlier. Now, here's the important distinction. If you're using the fund to qualify for the Golden Visa, Portugal does require the qualifying investments be held during the required period, which is currently 5 years.
That's the 500,000 euro.
Exactly. So the fund liquidity doesn't mean cash out your Golden Visa investment whenever you want to and still keep the visa. That's just not how this works.
All right, so reason number 3 here is that the world is hedging the US, and so are we. Now, this is probably the most important one when it comes to your finances and to our finances. We are watching what the rest of the world is doing with its money. And increasingly, some very large investors and institutions are asking the same question that we've been asking. How much of our financial future do we want dependent on one single market, one single country, the United States? You see, earlier this year, Denmark's academic or pension announced that it was selling its entire U.S. Treasury position valued at about $100 million, citing concerns about U.S. government finances.
I thought Trump was fixing that.
Yeah. And they weren't the only ones. Electa also sold most of its U.S. bond holdings, saying that there was risk around U.S. Treasuries and the dollar. And other large European institutions and investors have told Reuters that they are reassessing how much exposure to the United States that they want. Now, let's be clear. This is not some global fire sale of the U.S., or we would see interest rates rising a whole lot higher and the sky would be falling. The truth is the U.S. Treasury market is massive, and the dollar is still the world's dominant reserve currency. Dominant, not only. But when some of the world's biggest institutions start reducing their exposure, we pay attention. We're also seeing something very similar to this happening with gold. You see, central banks are buying more gold, and some are moving that gold away from reserve banks that they've been keeping it in, places like New York and London. They're actually moving it home. A recent World Gold Council survey found that fewer central banks are storing their gold both at the Bank of England and the New York Fed, while more of them are increasingly moving that domestically or to alternative storage places. Now, that doesn't mean that the dollar collapses tomorrow. Again, the sky is not falling. It means that countries want more control, they want more diversification, and they want fewer points of geopolitical risk. Sound familiar? That's what we're thinking.
And then there's this. Treasury Secretary Scott Bessent had a note of his photographed recently at Camp David that was super crisp and clear, with one action item on there for him.
One.
His to-do list, buy $5 to $10 billion of Japanese yen. And shortly thereafter, the U.S. joined in supporting the yen. America hadn't participated in this kind of joint yen buying intervention in nearly 3 decades without it being triggered by a natural disaster, such as an earthquake followed by a tsunami. And you can say this is really just America helping Japan, and technically it was.
Right.
But we think there was a little bit more self-interest involved than just international benevolence.
Mm-hmm.
You see, Japan owns nearly $1.14 trillion of U.S. Treasury debt. If Japan needs cash to defend its own currency and start selling larger and larger positions of U.S. Treasuries, as it's been doing already, fewer buyers for our debt means higher yields. Exactly. The higher yields on American debt is ultimately higher borrowing costs for the United States, for businesses, and for American households. That's your credit card interest rate. That's your mortgage. Mm-hmm. And America doesn't exactly need borrowing to become more expensive right now. Federal debt is approaching $40 trillion. The federal government ran roughly a $1.8 trillion deficit in just the first 10 months of this fiscal year.
Thanks, Trump.
Exactly. And Treasury expects to borrow another $1.37 trillion in the second half of 2026 alone.
Big, beautiful bill.
So our interpretation of the yen intervention, it wasn't simply, oh, poor Japan, let's help them. Trump's administration never does that. It was, we really don't need one of our biggest lenders to destabilize our bond market right now. And this is exactly why we don't want all of our retirement depending upon one country, one currency, and one debt market.
Right.
We're not abandoning America. We're doing what governments, pensions, and central banks are increasingly doing around the world. They're diversifying their options, which this brings us back to Portugal.
All right, let's talk about the cherry on top.
Pop that cherry.
Right. Portugal still allows a qualifying 500,000 euro investment in eligible non-real estate investment funds to qualify for its Golden Visa program. The qualifying fund must meet specific Portuguese investment and holding requirements. So for us, this potentially gives us Portuguese residency and another legal option for living in Europe. You see, we're not moving to Portugal tomorrow. We're actually moving to Mexico first. So what we're buying right now are options. Mexico is one option. Portugal is another option. And the United States, that's still a third option. And to us, that's what wealth increasingly is supposed to buy. Not more stuff, more choices, more options, more freedom. Now, we'd never encourage you to make this your sole investment. And to be honest, we probably would never encourage you to make this more than 1/3 of your portfolio. But we did say we were going to share some interesting math with you that we promised at the very beginning.
All math is interesting, David, isn't it?
If you did invest 500,000 euro and it did earn the annual 13.6% that it has returned over the last number of years since its inception, that would generate about 68,000 euro a year. Even after taxes, that income would be well above what Portugal requires you to have as a married couple to qualify for the D7 visa of 16,560 euros. For other context, a couple in Portugal might spend around $30,000 a year.
Euro.
Thank you. And that includes rent for a 2-bedroom apartment in city center. That includes your food costs. That includes your healthcare costs. That's everything. So this one investment, it could fund your life in Portugal.
Okay, so here's the reason we would not invest in this fund. We would not put 500,000 euro into this simply to get the visa if we thought it was a bad investment. And you definitely shouldn't either. And to be clear, none of this episode is investment advice. This is investment education only. This is a risk level 4 investment concentrated heavily in one relatively small market. Its value can fall, Portugal can underperform, the euro can move against the dollar, and investing abroad creates additional US tax and reporting considerations. And 500,000 euro is only necessary if you're pursuing the golden visa. Optimize does say investors interested in the fund itself can currently access the strategy starting at 1,000 euro.
All right, so why are we still moving our money abroad? Well, because this investment checks 3 boxes for us all at once. The performance, diversification, and residency optionality boxes. We came for the golden visa, but increasingly we are staying because of the fund itself. And we think that's exactly the question anyone considering this investment and the golden visa should actually be asking themselves. If they took away the golden visa, would I still want to own this?
If you want to see the optimized Portugal strategy, its performance, its holdings, the risk, and how 500,000 euro golden visa route works, use the optimized link in the description of this video or on your podcast player to request more information from their team directly. Again, this is not investment advice. This is investment education only. Do your homework. Talk to your financial planner or your tax professional to see if this is an appropriate investment for you. And remember that past performance is not indicative of future results. Before you bounce, though, let us know if you're rebalancing your portfolio in this Trump economy in the comments below in YouTube, and definitely give us that green heart emoji. Then watch our Gay Retirement playlist for more information on how we're managing our investments through retirement, because Portugal is just one option that we're using. And finally, if you're considering retiring or moving abroad and aren't sure where to start, grab a free copy of the Queer Money Retire Abroad checklist in the description of your podcast player, as well as the description of this YouTube video. And until next time, retire by design,
Not by default.